Hello and welcome everyone to another episode of Align, where we help you align with your true self, others, and your desired outcome to live your best life. So as we've seen the ups and downs and popular, not popular, the common craze right now is our favorite B word, Bitcoin, or C word, cryptocurrency. And, for people who are really into it, they know it like the back of their hand. People who are newer to crypto or Bitcoin, I'm sure there's a lot more desire to be much more educated about it. Why is this so important? Why do we care? So I definitely wanted to bring someone who's an expert in this field, who also explains things in a way that it's very digestible to someone who has, candidly, I have no crypto background, I only have quant background. So Stephen, I wanted to first highlight you and have you on board. So thank you for joining us.
Yeah, thanks so much for having me.
Of course. So we've met at a conference serendipitously, like what, 3 years ago at this point? Does COVID count? Does that count as a year?
Yeah, COVID counts as 10 years.
Okay, so 30 years ago, we met at a conference and it was serendipitous, and I've learned so much about it through you. And you've obviously such a passion for it. You've dedicated a lot of essentially your career to it. So kind of tell us about how you got into it, what kind of drove you to the industry.
Yeah, absolutely. Well, in my, I had a couple of different prior lives.
Yeah.
One of them was in technology, and the other one was in traditional finance. And in technology, I had taken a break from traditional finance to go work at this video game company called Electronic Arts, doing strategy and M&A, and a lot of really fun things there. And I happened to be there when the iPhone came out. And one of the things that I noticed was during that period of time was how fast the world was about to change, and we were moving from an analog society to a digital society. And when I say that, we're not just doing things on our computers at home. We're going to be doing everything from a handheld, and not a BlackBerry anymore. A handheld that can do many different things and vast calculations. But in that, I saw that a lot of video games were using digital currencies that you can move around the world and buy things within games. People were even dedicating hours in a day to mine gold in video games and sell those achievements to other people so they can go and buy items. And that was a really big thing back in 2007 through World of Warcraft. And then fast forward a little bit further down the road, I was at Guggenheim Partners, back in traditional finance, trading emerging markets, sovereign credit, bonds, and this thing called Bitcoin came out. And the very first thought that I had was, well, this is really interesting, because now you have a common currency that can be used outside of this currency that's built within every single video game, that can move things around the world. And the way that I look at different currencies is that each country has a physical border, and almost every country has its own currency. And moving things between countries, utilizing all the various currencies, can be difficult at times. When you move, say when you move value or move your currency from one country to another, you typically have to clear through the U.S. or through London or through Euroclear. So I found this to be quite interesting as a way to facilitate the movement of value globally. And I saw it as a currency, but I saw it more as a borderless, cashless currency for the electronic economy or the digital economy. And that's really why I got into it. I saw that as a very interesting way for the world to move into a new currency. And I also saw a lot of other applications of blockchain beyond just digital currencies.
Yeah. And remind me, how long have you been involved in Bitcoin/cryptocurrency now?
Well, I first learned about Bitcoin in early 2010, and spent a lot of time studying it, and it really wasn't until 2016 that I left my job and joined a fintech startup to start pursuing a career exploring blockchain and its applications.
Great. Awesome. Awesome. Over a decade of, call it, watching it grow and it's up and down. So actually great. Next question for that is, you've seen the ups, you've seen the downs. Why the craze now?
Yeah, so I think what happens with any technology is it needs adoption. So Bitcoin has been very slow to adopt because it's actually not that hard to use. I mean, sorry, it hasn't been that easy to use. So when it first came out, again, I kind of saw it as a great currency for developers, and which actually is a really good thing because going back to my Electronic Arts days, we had dev groups all over the world that we paid, and having developers all over the world is really convenient. Paying them is really hard. And when you start working in the world of developers that are mostly working remote, can work from anywhere in the world and still get the same work done, developers paying each other, maybe one dev shop outsources to another, or or a digital company is outsourcing to a dev shop and paying people around the world. It just makes sense, right? I mean, it was something that was difficult enough to, back in 2010, really only developers could use it, or people that really understood security could use it. And it wasn't until 2013, 2014 that platforms were being created where normal people like me can actually go in and buy it, not be afraid of losing my keys or getting hacked or getting something stolen. And then even fast forward till today, the exchanges and the custody solutions for digital currencies like Bitcoin have become very sophisticated. Really in the last 9 months, Coinbase has made a lot of strides to be very institutional in quality. You could say the same thing for Gemini, and then even some of the larger, traditional custodial banks are getting into the game as well, like Fidelity. So it's just made a lot of progress in the ease of use and the ease of storage for people without having to really be able to program and secure it themselves.
Got it. So it's just a matter of time for this technology to develop and people to educate themselves on it.
Yeah, that's right.
Any market influence? Obviously 2020 has shaken a lot of things up in terms of investments, right? Like people had to re-look at their portfolio and what they want to allocate to, how they want to invest. Has that in a way also kind of spearheaded the spike in interest? Like how has markets also affected Bitcoin?
Yeah, I think that definitely had a big effect. If you remember back to the last financial crisis, in 2008, 2009, the Fed interjected and really started driving interest rates much lower than what they had previously been. So you've gone from a situation in the last 10 years to where interest rates are roughly 5 to 6%, and as an investor, you can hold it earn 5 to 6% with 2 to 3% inflation and still have a real yield, to 10 years later, where that spread between inflation and yield has compressed quite a bit. And then, of course, during COVID, you had the market crash in March of last year, with the Fed and policymakers stepping in and pushing bond yields quite low. I mean, the 10-year was below 60 basis points. And at 60 basis points, where you're constantly printing more money, that means that you now have a negative real yield on bonds. If inflation is at 3%, I mean, real inflation, when I say real inflation, the thing that affects you and I, is probably much higher. And if you look at housing prices and how much housing prices have gone up in various places, areas of the country, and how much raw materials have gone up and other commodities, lumber has gone up 4x, and housing's gone up 12% in some places, some places less, some places more. But the 10-year has been yielding less than 1%. You really have to evaluate your portfolio. And you may have gone from a 60-40 model to a 70-30 model. And I would even argue that for an average person, you probably don't even want bonds anymore. And I was a bond manager, right? So it's kind of hard for me to say that.
Yeah.
But I would argue that you probably want something more like a 60-20-20 model, where it's 60% equities, 20% cryptocurrencies, primarily Bitcoin and private equity, and then another 20% in, say, real estate. And I think that's really the way to go.
Yeah, super helpful. Why, not why, what are the future developments? What should we be excited about coming up? I know you're working on some things as well, so would love to learn more about that.
Yeah, I mean, obviously there's some things I can talk about, some things I can't,
Right.
but I'll try to be as broad as possible. One of the things that at Valkyrie, we launched a Bitcoin trust back on January 1, as a matter of fact, which is a investment vehicle that corporations can add Bitcoin to their balance sheet through. And rather than just going out and buying Bitcoin and reporting to your accountants like, hey, I have X number of Bitcoin, check out my wallet. Accountants don't really like to see that. They do like to see statements from a real accounting firm that that shows actual assets sitting in a trust, which is something that we created, and that's actually gone quite well. We do have some more products in the pipeline that are also in the grantor trust structure that will be coming out soon. Some of them, quite interestingly, will produce a yield. So that's one of the things that a lot of people don't realize that are in traditional finance, that you can actually earn yields on various digital assets, including Bitcoin. Sometimes through traditional repo, other times just through the rewards mechanism for staking, and that's something we can talk about later. But that is something that is quite interesting. I mean, you can earn anywhere between 4 and 8% on staking your crypto. So we are creating products there, and then of course there's been news out there that I can refer to of Valkyrie filing for a Bitcoin ETF, as well as a couple of other ETFs.
Great. Let's define that, because I know a lot of these terms are, I don't even know what stakering is. So I definitely want to make sure the audience understands that. So what exactly does that mean, stakering?
Yeah. Well, so staking, there's really two different ways to describe it. One of them is very similar to a traditional tri-party agreement where you can post collateral. It's simple securitization. So if you have a bond and you're working with your custodian, you can post it as collateral to borrow against, and then your custodian will work with a third party to then lend that out to earn the interest to pay you that margin. So there are various features in blockchain that allows you to do that with certain cryptocurrencies. Another one that's really interesting as well is to kind of explain how Bitcoin works a little bit. Really think about it as an Excel sheet, right? It's a ledger of transactions, and it's called blockchain because it's a chain of blocks. And every time a new transaction happens, or a group of new transactions happen on the Bitcoin blockchain, a new block is created, which is next in line, next in the chain, that includes all the transactions, the entire ledger from the block before, plus all the new transactions that have happened since that block was created. And that really adds to the security feature, so that you really can't manipulate data, because you can look back at all the blocks that happened previously, or all the ledgers that had happened previously, and see all the data on them. And the way that works is a very decentralized way of servers running around the world that are collecting and posting that data. And if you're running one of those servers, you get rewards for creating that new block.
Yeah.
And that's a payment for your work on creating that block as a server. There's other blockchains that do it a little bit differently, where you can run, they're called master nodes, and the master nodes are the ones that create the block, but the master nodes are really governed by the amount of that token that is owned. So if I own a pool of a certain token, let's say Algorand is a really good example, and I own a lot of Algorand tokens, then I can create a staking pool that allows you to actually run that master node and earn rewards for creating the new blocks that way. It's a little bit different than the way that Bitcoin works. And the rewards for a lot of these are anywhere between 4 and 8%. So if you have a big enough collective, you can earn a yield for doing work on that blockchain by making sure that it's secure.
Got it.
Yeah.
Any other developments? So, whether because right now the technology isn't there yet, but how other ways do you see cryptocurrency or Bitcoin being more, I guess, creative as a investment? I'm making this up. Like, could we in the future potentially like have collateralized, like kind of tranches of underlying pools of cryptocurrency?
Yeah, absolutely. I mean, absolutely. You completely can. I mean, so Bitcoin is actually a good example of something where even though I described it, it works a little bit differently than some of these tokens that you can stake and earn a yield on. You can still post Bitcoin as collateral, and earn a return off of it, or earn some interest on it for letting somebody else lend it out. And there's several companies that do that. Gemini is actually a really good example of an exchange that also stores your Bitcoin for you, but you can also post it as collateral and earn interest on. Now, it's not a lot of interest because Bitcoin's an asset that a lot of people desire, a lot of people want, but you're at least earning something. You're earning more than 10-year treasuries, that's for sure. Now, but you're absolutely right. I mean, there's a lot of different ways to structure these assets, just like you can, say high yield bonds in a CLO. So it's really not that different.
Got it. And just so, for people who are not as familiar with Bitcoin, and cryptocurrency, what are some things that you can actually pay with Bitcoin and cryptocurrency right now? Yes, just so people understand like how widely used it is, maybe even what countries use it, much a higher adoption rates. I'm assuming the emerging markets and the more, I guess, like politically unstable countries would probably rely a little bit more on cryptocurrency.
Yeah, that's right. And there's probably, there's probably four main cryptocurrencies that are, and by the way, not all of these digital assets are the same, right? Some of them are blockchains that are protocols. Some of them are cryptocurrencies. Right now, we'll talk about cryptocurrencies for a moment, and there's probably four main ones that are in circulation in various countries and for various reasons. And I would say the four would be Bitcoin, Zcash, Dash, and Monero. And the reason why some of them are more popular than others is, so Monero is a good example where a lot of the transactions remain very private. So in countries, and some emerging market countries where people are trying to hide, how much money they have from the government, to either avoid taxes or even more popular, to avoid having their currency confiscated, might use Monero. It's considered more private. Zcash is a cryptocurrency that you can either make it private or public. It actually, you can toggle between the two. So in a country where somebody's afraid of being confiscated, they might make it private, and then in the US or in Europe, where there's KYC AML rules, they might make transactions public. And then Bitcoin and Dash are both pretty public. You can track the ledger. So what I would say is that in there are certain countries that use all four of them, depending on the country. Sometimes it's because the currency in that country might have a lot of volatility, which is hard to believe that a country has currency that's more volatile than than Bitcoin, because people seem to think it's very volatile. But if you look at the Turkish lira, it's been extremely volatile in the last 4 years. And in Turkey, Turkey is one of the countries that really utilizes all four of those that I mentioned. But I would say that they utilize the euro more than anything else still, because it's right next to the eurozone, and it's really become the currency of tourists and people that are traveling there. And then there's a lot of areas in the Middle East that are utilizing a Bitcoin, as well as in Latin America. So they're all very popular there to move money back and forth, or to kind of cash out their savings. And if you ever go to Miami, you'll notice that there's Bitcoin ATMs everywhere. That Bitcoin is very popular in Miami, and it's not just because the mayor of Miami is trying to make it a crypto haven. It's because there's a lot of immigration happening between Latin America and Miami. Yeah. And they're just, middle class people are just trying to get out with anything that they can, and they're selling what they have, taking what they can with them, and moving things into Bitcoin before they move into the US. So that's very popular. Now, developed countries, what's one of the reasons why it's gotten very popular in the last 6 months is there have been applications that have been created, like Backed or even Gemini, and a lot of applications that are built off of Coinbase's API that allows you to purchase goods and services using Bitcoin. And even more recently, even in the last week, I believe you could buy a Tesla utilizing Bitcoin, or certain other goods and services. So it is becoming much more popular and much more widely circulated.
Got it. Yeah. Super helpful. I think the key things that you mentioned is, obviously the volatility of specific countries and their currencies, the transfer of payments across countries as well, right? Those are kind of key areas of why we definitely need it now. But if you think about, looking forward 10, 20, 30 years, why is cryptocurrency going to be a part of our future? Why do we need it? I think the common criticism of it is that there's no intrinsic value, right? So Ray Dalio came out just today saying, like, hey, maybe in the future we won't even, it won't be allowed going forward. Why do you think we can't have a world without cryptocurrency?
Yeah, well, there might be something different. There might be another technology. I mean, cryptography is something that is used, which is why it's called cryptocurrency, which is basically a mathematical formula that helps it become, unhackable, so to speak. There's some blockchains that are hackable, that have really weak cryptography, and there's others that are very strong. And another thing that makes the encryption, or another thing that makes it harder to hack, is the amount of time between blocks, right? So one of the complaints about Bitcoin is it takes 10 minutes for every block to be created, which means you got to, if you send it to somebody, you have to wait 10 minutes in order to actually receive it, which sounds really slow. But that amount of time actually causes it to be more secure, which makes it very good for very large transactions where you don't have to get something instantly. Now, that being said, there's applications like Backed that allow you to buy things like Starbucks or Subway, and all they do is they create a centralized ledger where they're just moving the money for you, and then they post it to the blockchain later. So that way you can instantly get it, just like you can with your Starbucks app on your phone, where it instantly scans, and then Starbucks later moves money from account to account. So all that being said, money has always, money has been digital for a long time. Mm-hmm. And the problem with digital money is that it's very binary, right? It doesn't give you a lot of sovereignty. It has to clear through one country. When you're moving from one country to another, you have to go through intermediaries, and those intermediaries charge massive fees. It's one of the reasons why frankly, why bond yields are so low and the yields on cryptocurrencies are so high, because there's fewer intermediaries, taking their pound of flesh. So, whether or not it's going to be outlawed, I mean, look, when I first read the Satoshi white paper back in 2010, my first instinct was, yeah, this is really cool. Developers are going to use it, but if it gets any further than that, the Fed is going to ban it. Well, the Fed didn't ban it, and it's a thing. It's something that really can't be banned. I mean, if one country decides to ban it, fine. All the other countries in the world are going to use it. They're going to use the technology, and the country that bans it is going to be behind. And we see what happens in countries that actually ban the flow of money, right? Brazil is a really good example of that, right? So if you're moving money in and out of Brazil, you're paying spreads, 8 to 12 points. Try to invest in a company in Brazil, and then get returns on your investment. You lose a lot on your spread just because Brazil had passed so many laws trying to keep its economy from not being so hot back when it's a major commodity producer, and they were trying to limit the amount of investments coming in. Well, they did such an effective job that it's very difficult to even invest in the country at all. And now we're seeing an economy that was extremely hot go to an economy that's extremely cold, and many people are leaving. So that's what happens when countries try to prevent or try to limit the flow of money in and out. And I think any economy that tries to limit Bitcoin, which is now a thing, which is now a digital currency that a lot of people are using. Once you try to ban that, it's going to be very difficult for that economy to exist in the global world, in the global economy.
What are some common criticisms of cryptocurrency? So you mentioned one, right? The time it takes for a transaction, but what are a few other common criticisms of it, and what's your rebuttal?
Yeah. So one of the, and this has been my criticism as well, right? One of the toughest things with using cryptocurrency on your own is that, if I have money in a bank and it's my money and I want to transfer it to another bank or transfer it to you, it's actually quite easy. And guess what? If I make a mistake and I can, or if I can't get into my bank account, I can always call my bank, prove that I'm me, and they'll reset my password. Or if I send it to the wrong place, we can probably get it solved. There's a lot of things that you can do to solve issues when you make a mistake using fiat digital currency. With cryptocurrency, there's not a lot of ratifications there, right? So if I try to send you Bitcoin and I type in one wrong number or one wrong letter in your address or leave something off, it's gone. It's never coming back. I'm not calling my bank and I'm not getting it back. Or if I'm managing it on my own, in my own wallet, my own created wallet, and I lose my private keys, which is essentially my password, I can't call the operator at Bitcoin and say, hey, can you please reset my private keys for me?
Right.
And because I lost mine. And
that's how I lost the Bitcoin that you gave me. I was like, how do I get these keys? Yeah. Anyway, so
that's
yeah,
right. That's right. I sent you Bitcoin 3 years ago, and it is gone. And that Bitcoin is probably worth, I don't know.
Don't break my heart. Please don't. I am so mad. I was like, why did I not save this down somewhere? Anyways, yeah. So that does happen. Correct.
It happens, or even when you have, technological solutions to that, like a Trezor is a device, is a hardware wallet that a lot of people use, where it was created to where it makes it a little bit easier to manage it, and people use it as a hardware wallet. But Trezor had a major attack and was hacked and got a lot of people's information, and that's not good at all. Now, those are a lot of problems that were very common in the early days of Bitcoin. I mean, I would estimate, and a lot of people estimate, that probably, I don't know, something close to 3 million Bitcoin is, and by the way, 3 million Bitcoin, not $3 million worth of Bitcoin, but 3 million Bitcoin it's
Right.
probably been lost forever, right? People put it on a hardware wallet, they tossed it out. It was back when Bitcoin was worth $1 each, and nobody really cares. Like, oh yeah, I've got like 20 Bitcoin. Who cares? $20. Toss it out. Well, it's not worth $20 anymore, and now people are kind of regretting losing it, or they transferred to the wrong address, or they lost their keys, or here's another big problem is let's say that you pass away and you own a lot of Bitcoin, and how do your dependents get that Bitcoin? It's probably gone forever, right? And there's also a lot of speculation that there's $1 million, or sorry, 1 million Bitcoin that is probably just lost from Satoshi. I mean, some people believe that he's passed away, or there's multiple people and they can't access it. I mean, there's a lot of theories out there, but there's a lot that's gone, right? So that's the biggest argument against it. Now, like I said, people like me, I would have been one of those people that have, I try not to make mistakes when it comes to finance, but if I had been buying, Bitcoin in 2010 into some personal, wallet, and something could have gone wrong, and it probably would have, right? So, but it's one of the reasons why we have a lot of solutions today, right? Some of these custodians are extremely sophisticated. It's why Coinbase is very trusted. It's and there's now insurance available on top of it. So if I hold my money in Coinbase, then they take care of it all. I don't have to worry about anything. And there's also other solutions out there where people want to be a little bit more hands-on, but not quite so hands-on. There's a wonderful company out there called Casa that all they do is manage your personal keys for you, but you still own your personal keys. They just kind of help you recover if something happens. And that's another really good solution for people that want to be a little bit more hands-on and don't want to hold it in a traditional custodian. One of the things that we offer is that there's a lot of companies that are putting Bitcoin on their balance sheet. MicroStrategies, Tesla. There's many others, and it's become a very popular thing to put Bitcoin on your balance sheet, and for publicly traded companies. But there's also medium, small companies that want to do the same, right? So we're working with several different companies that want to do this, and as I mentioned earlier, we've set up a grantor trust structure that allows companies to come to us and we hold it for them. It's a simple solution. We take it in. We've got a chief security officer that handles the security from the time that it gets from you to us to Coinbase, where we hold it as custody. We have great terms with Coinbase. They have insurance on it, so it's just sort of a safe solution for people that don't want to deal with it.
Yeah. And
then we can produce records so that corporate accountants don't flip out everywhere from striking a value, daily value, and giving you the ability to liquidate if you want to on a daily basis as well.
Aside from the outright ban of cryptocurrency, what would cause the downfall of cryptocurrency? I guess from a popularity perspective, you think about some of the ingredients that would cause that, what would it be?
Yeah, I mean, outside of a global energy shortage where, all computers shut down, which, people talk about all the time, or a zombie apocalypse situation. I think there's a couple of different instances. Look, the way that we think about blockchain, the way that we think about cryptocurrencies today, it's certainly a really brilliant innovation, and Bitcoin is a brilliant innovation. And for the longest time, I felt like there was a good chance that some better innovation that was sort of a copycat innovation could come along and displace it. I'm starting to feel like the odds for that is less and less as Bitcoin really becomes the de facto, global currency for for a digital economy. But that being said, there could be an innovation that comes along that's quite better. We don't know. The future is uncertain there. But yeah, that being said, I do believe that we're starting to see a lot more adoption, and people are transacting in it more and more.
Mm. And with the, popularity, the number of transactions coming on, not just from an institutional perspective, but also retail, we're seeing a lot more of it as well. What are the dangers of this craze, and what are your thoughts about, kind of guardrailing against a lot of the dangers of the not just the volatility, but the instant popularity, the swings of
Yeah.
cryptocurrency? How can we, protect? I would say specifically with even retail investors, right? We've seen what social media can do. What are your thoughts on, whether it be social media, guardrails, regulation? What are your thoughts?
Yeah, I mean, I think the most important thing is to know what you own. Um, you know, there was one cryptocurrency that was getting a lot of popularity recently called Dogecoin,
Mm,
and it was literally created as a joke. And a lot of people don't realize, well, many people do, but a lot of people don't realize that it was created as a joke.
mm,
But then it became a thing, and people joke, and then the joke came back recently, with Elon Musk. And now, if you go to a Mavericks basketball game, you can buy things using Dogecoin in the stadium. So, for me, it's something I don't really know what to think. About Dogecoin at this particular instance. But it really is one of those situations where you really have to understand what you're buying, and what each one of these you know cryptocurrencies actually does, or what one of these digital assets actually does. And so that's really the hard part. When people ask me all the time, you know which 10 cryptocurrencies should I be buying. I'm like, well, just start with Bitcoin. It's probably the most legitimate one out there at the moment. And then there's a lot of other ones that they're not really built to be currencies. They're built to be something else. So
mm,
unless you really understand what it's meant to do, don't go buy it.
right,
Right? Start with Bitcoin, and
right.
read the Satoshi white paper. It's sort of like a PPM a lot of times, in my opinion.
Mhm.
And then also be careful about how you're buying it, right? There's a lot of scam artists out there, right? And just like there is with anything else, right? I mean, you get calls all the time, that say, well, hey, this is the IRS, and you need to send us $3,000 right away, or we're going to come after you. Well, it's not the IRS, it's scammers, and they get away with it most of the time. Well, Bitcoin is another way that they try to, what they try to scam people out of, not just dollars. So just be very careful there.
Mm,
And then I would also say, kind of in the beginning, utilize legitimate exchanges. And there are some legitimate exchanges that you can use, right? Whether it's Coinbase or Gemini, Kraken. Those are the probably, in my opinion, the top three that your money's not going to evaporate. Now they all have various types of fees and various structures, but they're all three of those are highly regulated, and are under a lot of scrutiny.
mm,
So that's another way to be protected. By the way, if you don't want to deal with losing your crypto, or being scammed, just let somebody else handle it. That's sort of like why companies like mine exist, why others exist the way that they do. It's no different than somebody that launches an ETF that invests in Japanese yen for you, right?
yeah,
It's like, am I going to really go out and set up an FX account and trade my dollars for yen? No, I'm going to buy an ETF that does it for me. It's a little easier, you know.
right, right. Super helpful for people that want to be better educated on cryptocurrency, Bitcoin, right? There's a lot of super technical, put you right to bed books and articles. What are the ones, because you're really good at explaining things, what are some books, articles, news sources that you recommend for people to just really start getting up to speed on, not, theory is great, but practical ways of investing in it, learning about it, downfalls of crypto, what the risks of it?
Yeah. So I think the very first thing from a reading perspective
Mhm.
is I would look up the Satoshi white paper and read it, and then you really understand why it was created, what it does, what it's supposed to do. I mean, it really is just the basics, and it's only 10 pages, right? And there's some things there's some things that are hard to explain unless you're are hard to understand unless you're a mathematician. There are other things that are written in really plain English that are easy to understand.
Mm.
So that really is number one. There's a couple of newsletters out there that I think are really good. You know, you know, well, maybe we'll start with like people to follow.
That's great.
You
Oh,
know,
so, yeah, those are great. Those are easy reads. Yeah.
yeah. So as far as people to follow, I would. It depends on how technical you want to get, right?
Mhm.
If you want to get super technical and dev speak, I would follow Elizabeth Stark. She's an amazing woman who is actually a lawyer and a developer who is working on a thing called the Lightning Network, which essentially bridges transaction times between Bitcoin blocks.
Mm.
It's a really cool technology, and she's been working on it for a long time. But I would definitely follow her and Lightning Labs. If you want things that are a little bit more like, maybe from a financial standpoint, Jeff Kilberg
Okay.
is fantastic. He's a guest host on CNBC. Full disclosure, he's one of my partners, and he is he's a trader, background in trading, and he is fantastic on just kind of analyzing the markets and trends on what's happening. And then one of my favorite podcasts to listen to is a podcast by a guy named Scott Melker called The Wolf of All Streets, which is instead of the Wolf of Wall Street, Wolf of All Streets. And he really does a great job of having fantastic guests on his show that that talk about Bitcoin and other cryptocurrencies from interesting standpoints. But he always has very good guests. But that's a good place to probably get started. Oh, and then I'd also follow Leah Wald, WALD. She's fantastic. She's kind of a former World Bank economist that kind of got into Bitcoin pretty early, and also does she runs her own nodes, and she's also a developer. Really fascinating person.
Awesome. Well, Stephen, thank you so much. Honestly, I feel like I've learned a lot just from 40-minute session. I want to always wrap up with asking someone, all my guests, what their unique gift is. So I think every person has a gift that they can share with society to make it a better place. So what do you think your unique gift is?
I've always been told that mine is team building. And I think no matter what I've done, no matter where I've been, I think my unique gift is building amazing teams. And I think I have an eye for talent, and like to find teams that might be, or I look for people that may not have been discovered yet, so to speak, and kind of find that hidden potential within people. And I think a lot of it comes from my background. Just growing up in a modest household. Didn't go to like the Ivy League schools in the beginning, and then and I have somebody that found the potential in me, and I like to do the same thing.
I love that. And I mean, hey, especially now, right? You're building out your team. And I was asking you in the beginning before we recorded, what's a spec? What's a job spec? I want to be helpful. And I want to be able to connect you with the right people who could join your team. You're just like, I'm looking for good people. We'll make a spot for them. So I'm super excited for your next venture. I cannot wait. I know you have a very, I wouldn't even say it's ambitious because it's so doable, but you have really big goals for the fund. Super excited for you. And again, thank you again for joining us today at Align.
Thank you so much for having me. And, it's great to see you again.
Of course. Well, I'll see you in person soon once we're vaccinated.
Absolutely.
All righty. Bye, Stephen.
Bye.